Today, the crypto market is a $3 trillion asset class. If we continue to extrapolate out the trend rates of growth, we get to $100 trillion in 10 years. So there's a 30x from here to come out of the space. And it won't just accrue to Bitcoin. It will accrue to a lot of things which will have huge performance. And really, it's the vehicle, Exponential Age Asset Management, and the fund, EDAF, Exponential Age Digital Asset Fund, that its job really is to capture that. Just so people cannot have to worry about trading and worry about how do I store my tokens or anything else. They're like, okay, I see this technology, I want to capture it, and it's a simple vehicle to do that.
According to cryptocurrency expert Raoul Pal, Bitcoin could fall to $75,000 in the near term. However, he believes that this potential drop is not significant. People see this chart, they worry that this shows that Bitcoin will fall to $75,000, but what we have shown is that the last time that happened, Bitcoin fell quickly and then recovered. And so it didn't matter. Paul said, while it's not clear what last time Paul is referring to, the analyst certainly believes that Bitcoin is replicating its 2017 performance, during which it rose nearly 20-fold from around $1,000 to over $19,000. According to Raoul Pal, 30x is possible if we focus on big coins like Bitcoin, Ethereum, and Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
Many people came to me and said, look, Raoul, I know what you're saying, that this is the big opportunity, the greatest maybe investment opportunity of all time. Bitcoin has already been the greatest performing asset in all recorded history, and this is just going to continue. But they're like, I don't really know how to do it. I don't feel like it's just a Bitcoin world. You know, there's all of these tokens. I understand the finance industry is going to build on it. I understand the social media industry, the music industry, the sports industry. Everyone's going to start using this technology. And in a world of AI, we need digital ID and proof of humanhood and all of this stuff. And blockchain technology is that. It's just a technology. It's a database that's really clever. If you think of blockchain as the foundational layer of the new internet, where value is transacted, stored, proven, right? That is what EDAF, the fund of hedge fund, does. That's the tokens, right? The tokens are just like a share of that of these networks. Like if we'd have tokenized the internet, that's really what we're doing here, right? We're tokenizing the new internet. So that's that trend from 3 trillion to 100 trillion. That's what the fund of hedge funds does. The next layer is all the applications that are going to get built on this. The applications are the borrowing business, the lending businesses, the tokenization of culture, the tokenization of real world assets, all of the things, gaming, all of the things that are going to get done, they're going to get done by venture capitalists funding it. And these are not liquid token businesses. Some come with tokens. So what we're doing is the same playbook. Is like, well, we've got the foundation layer, like the internet. Think of what happened after the internet was built. Google, Facebook, all of this was built on top. That's the capture here. There's thousands and tens of thousands of different tokens, and it looks very confusing for everybody, including myself. We don't have the time. It's okay. We can all hold a bit of Bitcoin, a bit of Ethereum, whatever. There's ETFs for that. But really, it's capturing what's this massive adoption of the technology in the space. And so I found that the best answer for my own capital was to give it to a bunch of hedge funds whose job is 24 hours a day to monitor my capital and find the opportunities.
He also predicted that the cryptocurrency market would explode in the coming years, leading to $1 trillion market cap. The analyst explained the macroeconomic trends that shaped the global financial sector after the 2008 crisis. According to Paul, every bear cycle first boosts tech stocks because they help shape the future of the markets. He cited the fact that the cryptocurrencies are built on technology, and the next recession will propel them to new highs after the recovery. Paul supported the observation that the tech sector is the biggest winner after a stock market crash. He explained that the cryptocurrency market is the first to benefit from a downturn because its technology is new and unexplored. The expert predicted that if the cryptocurrency market reaches a market cap of $2.5 trillion, the next stop will be $100 trillion. Paul backed this prediction using Metcalfe's law, which is driving unprecedented levels of adoption. According to him, the market will experience mass adoption after the next recession, which will propel it to new highs. Chris Bernst, former director of ARK Invest, also backed Raoul Pal's bold and optimistic forecast. Burke said that he would not dismiss Paul's observations, as it is possible that the cryptocurrency market could reach a market capitalization of $100 trillion. Kathy Wood of ARK Invest also strongly believes in Bitcoin, that it could reach $1 million in the next few years. If this happens, the overall cryptocurrency market will explode, leading several altcoins to reaching new highs in the rankings. In conclusion, leading experts in the sector believe that the conditions are in place for the market to take off. Paul says Bitcoin and other major altcoins are looking strong despite the volatility in the crypto markets. Bitcoin, Ethereum, Solana, and Sui are all showing bullish patterns on their higher time frame charts. We are still in the midst of the biggest macroeconomic trade of all time. All the shaking and fear, uncertainty, and timeline doubt is just noise. All it takes to catch it is not being too far off the risk curve, not using leverage, and having the ability to be patient and walk away. Paul says Bitcoin is still in an uptrend on the weekly chart, where it is consolidating well above the trend line, connecting its previous all-time highs in the $60,000 range. It is a headache, and also sad to see so many pessimists and nervous people in the crypto world when Bitcoin looks like this. Paul suggests that Ethereum is trading inside a bullish triangle pattern on the weekly chart and is preparing for an outbreak after bouncing off of the lower trend line near the $2,600 range. Then he shares this weekly chart of Solana that suggests that Solana is still in an uptrend and could be preparing to reclaim the $200 level as support. Finally, he suggests that Sui is on the cusp of repeating a historical pattern of breaking a descending trend line resistance and recording new all-time highs. Paul believes that artificial intelligence, AI, is the greatest innovation that humanity has ever achieved. It will break the entire economic model, for better or worse. It will change our understanding of how society works and what we humans do. It will change our understanding of what we humans are and what will be. He argued that crypto could be the average person's best hope for survival in the coming technological revolution. He argued that by investing in cryptocurrencies now, people are actually buying shares of future technologies and use cases built on Layer 1 networks like Bitcoin and Ethereum. Paul said the blockchain will become an increasingly important technology. He mused that it's not really about money or finance, but about truth. That is, having a verifiable source of truth will be crucial in the world of tomorrow. He predicts that Bitcoin could reach $2.6 million and Ethereum $125,000 by 2034, with the total cryptocurrency market cap reaching $100 trillion. Paul also believes that the only real investment options right now are tech stocks or cryptocurrencies, adding that in a digital world, everything becomes null and void. What we have created with blockchain is digital scarcity. Financial experts Michael Howell and Raoul Pal explained that most countries prefer a weaker dollar, despite Treasury Secretary Bessent's support of the dollar strength. Paul said that everyone wants a weaker dollar. The U.S. dollar is one of the main drivers of global liquidity, and much of the global lending is based on this currency. According to Howell, what really matters is not the amount of debt countries have, but their ability to refinance that debt and the debt liquidity ratio, which is a problem for countries like China.